This right here, guys, is a unique 5-minute fair value gap trading strategy for you to destroy the market. Stay tuned until the end of the video because those things have helped me become financially independent and they might also help you. So let's just go ahead and begin with our presentation. And right before we begin with the video, those are my results in the trading signals and on my own trading as well. I have those 14 25k accounts, 4 of them have reached payout already and a bunch of them are gonna follow. This month, besides the issues that we have had with Arithmetic, is gonna be a month of at least $5,000 payout. I am a legit trader. I'm showing everything live in the trading signals, guys. So just go ahead and enroll in the trading signals right now if you wanna get educated. Most trading signals just throw numbers. I'm giving full education. And if you learn what I'm teaching, you will be able to hit those numbers as well, the one after the other. So let's just go ahead now and continue with the video. The rules of this strategy are those that you see right here. Number 1, let's get our magic pen tool right here, laser pointer. Number 1, identify a liquidity grab on the 1 hour time frame. Yeah, guys, it's not just gonna be the 5-minute time frame. It is also gonna be the 1 hour time frame where we will be identifying certain things. This is very important because if you're a beginner, you won't be able to identify everything on the 5-minute time frame. Let's go ahead and continue. Number 2, then you scale down to the 5-minute time frame after you have identified a grab of liquidity on the 1 hour. Okay. Number 3, identify a momentum move to the opposite side. And you will tell me what is defined as a momentum move, Chris. I am going to show you what a momentum move is for this strategy. Number 4, identify the breach of an inversion fair value gap. And we are going to go through some details over there as well. And number 5, enter with a market execution. The stop loss and take profit, we are going to be talking about them in the slides where I'm going to be showing you 2 examples. In the second example, we are also going to have a loss at the beginning. So I'm going to show you something very realistic. And number 6, just go ahead and join my services right now if you want to see me trading live every single day, transparently, not like other people are doing who are just manipulating you and they just want to take your money. Okay, I'm making money out of trading as I'm proving right here, guys. So I'm not one of those who is just living from the mentorships and all that stuff. If you want to learn to trade like the professor is me, go ahead and join my exceptional services. Let's just go ahead now and begin with our first example, guys. First example is going to be a bullish example and then we're going to be proceeding into a bearish example. Identify liquidity grab, as we said, on the 1 hour time frame. And now I'm going through those rules one by one. Okay. So there we go. This right here I'm saying at the beginning, let's analyze this whole move. This was an overall uptrend going like that if we were to look in the past. And then we have this move right here. This right here is your first grab of liquidity as you see it. Why? Of course, you can say this is a grab of liquidity as well. This is a proper low. It is lower than the low of the candlestick to its right and lower than the low of the candlestick to its left. Nonetheless, this right here is a proper low as well. And if you want to say the first major, let's say, grab of liquidity, you have it right here. But why doesn't this one qualify? It does qualify for this first rule, but if we are to check out what I'm going to show you later on, it does not conform with the other rules. There are more rules that this one does not conform with, let's say. So we will go ahead and identify and analyze this liquidity grab right here, not because we are seeing things in retrospect, because with the other rules that I'm going to be showing you, you wouldn't be taking any trade right here anyways. So the only trade that you would be taking would be after this grab of liquidity right here. Let's proceed. Now, if you are a more experienced trader, let's say, you would be able to identify this area from the 5-minute time frame only. This is the exact same area that we saw on the 1 hour time frame. But now we see it from the 5-minute time frame perspective, guys. You could easily do the whole analysis, as I say again, on the 5-minute time frame. Nonetheless, it will be easier for you to see the overall picture from the 1 hour time frame. As I'm saying again, especially if you are a beginner. Just stick around throughout the whole video, guys. You don't want to skip parts. If you want to become a successful trader, you need to learn the very, very small details. If you see me trading, as I'm trading, you will forget about all of the other mentors that you know. You will go ahead and say, this is real trading, this is crazy, this is absolute nuts, guys, okay? You will see me trading live. And of course, if you were to see me trading also in a one-on-one mentoring, you would forget almost about every single other thing that you have learned until now, and you would say, this now is proper trading. Let's proceed. Now, what are we doing? We are scaling down to the 5-minute time frame, and we are identifying a momentum move to the opposite side. This is the momentum move, as you see it, the one that I have highlighted with a dark arrow, all of this move, but I say, nonetheless, we need to see an impulsive move that gives us the opportunity to identify our next rule. We will not be waiting for this whole thing to take place. We want to optimize the reward to risk. There is no question about that. This wouldn't be proper trading to place, let's say, an entry somewhere here with a stop loss down there. You could be entering higher, no problem, but not like that. We do not necessarily need to see that many impulsive candlesticks again. Okay, we don't need to see that. The part in the red circle is more than enough for the impulsive move rule. But this, of course, has to do with what we're going to see in the next slide. Just remember again that on a lower time frame, such as the 1-minute time frame, this move, and I will take this move only right here, not even the whole red circle, this move on the 5-minute time frame, this is a bunch of candlesticks. So if we are to analyze from this candlestick as well, you would be seeing something like that on the 1-minute time frame, and then you would be, excuse me, let's do it again, and then you would be seeing that and that. So this is a full move, a whole move on the 1-minute time frame. Now, look at this move down here. Look at this part right here. You see that? This is my so-called inversion FVG. Before you run into conclusions, let me clarify some things. You see the gap from the opposite side, not any gap from this side. We are looking at any gap from the opposite side on the 5-minute between the low of this candlestick and the high of this candlestick. If this candlestick goes to be 1, these 2, and these 3, the high of this candlestick and the low of this one are creating this inversion FVG. This inversion FVG, I do not identify personally exactly like that as I'm teaching it. It is not a mistake. It is an absolute correct way to identify it like that. This is actually an inversion FVG. How I'm calling it is a double FVG, and I usually want to see one FVG on the left and one on the right overlapping with each other. This doesn't happen here, but this is how we will be identifying the inversion FVG right here. And don't go ahead in the comment section and say, but Chris, this is the inversion FVG. What the hell are you talking about? Guys, I'm getting my payouts. If you want to focus on semantics, I'm pretty sure that you don't know how to trade, and I'm pretty sure you have 0 payouts. If you have ever reached to a payout, you will have spent at least 10 times the amount before you reached a single payout. So just go ahead, be humble and learn, as I'm also learning from other people, okay? And I can definitely guarantee you that here I am an expert on what I'm doing. I'm not just another guy on YouTube, okay? I am an absolute expert when it comes down to trading. I know this might not be very humble to say, but this is the reality. I wouldn't be here otherwise. Let's proceed and say what we will be expecting right now is a breach of the inversion FVG, with a 5-minute candlestick body. This was my inversion FVG. This is it, the one in the green zone, and look at that right here. It is not being breached by a body here. It is though being breached with a body with this candlestick right here. So let's go ahead and proceed with the next slide and check out what is going to follow. the entry, the stop loss, and the take profit, guys. I got you covered, do not worry. This free content right here is dope, is fire. You will not find it anywhere else on YouTube, but of course if you wanna learn how to trade the charts plus the footprint, which is giving you an increase, let's say, of 40 to 50%, okay, well, my winning percentage is so high now that I'm using the footprint that you cannot imagine. I'm close to the 90% when I'm trading. Especially when I'm trading on my own, that there is no additional anxiety of trading in public. This winning percentage is to the moon, guys, to the absolute moon. So here, where are we entering? We said after the breach of the inversion FVG with a 5-minute candlestick body. So exactly right here where I have placed my entry, and the stop loss. Is the stop loss going below the low right here? No, it's not. The stop loss will be going, I don't want that, by the way, what is that? The stop loss will be going below the candlestick, which is body closed above the inversion FVG. So the entry candlestick is the one that we will be identifying in order to also place our stop loss right below it. And in a bearish scenario, of course, right above it, as we will see later on. Okay, so let's go ahead and proceed now. There you go. What am I saying here? You can easily follow the overall trend of the 1 hour time frame and target even higher areas if you want. Nonetheless, be realistic. The more you target without closing any partials, the more you will lose. The more price will come back and reverse to you and stop you out. So target previous areas of liquidity with the premise of a continuation of the overall trend. Because if you recall at the beginning, we had said right here that this, if we would look back in time, was an overall uptrend on the 1 hour time frame. Manipulation and price keeps going towards the upside. Now, could you target fixed reward to risk? Yes, absolutely. Could you close partials, let's say a 3-to-1, some here and the overall here? Absolutely. You could do a bunch of things that also, let's say, go hand in hand with your own risk aversion, psychology, and the way you want to trade, of course. Okay, so do not go ahead, guys, and say, Chris, should I take profit here or here? How much should I trade? How much money? How much in contracts or all of that stuff? I'm not going to answer because I'm not a financial advisor. I am not incentivizing you to trade. I am not telling you to trade. I'm just giving trading education. I'm sharing actually my journey and what I know. I am succeeding in the markets. This does never guarantee that you will be succeeding in the markets. I have spent tens of thousands of hours. The thing that I can do for you is, of course, you can see me trading transparently, all of the accounts, and I can minimize the time that you need potentially. So if I spend 10,000 hours, let's say, in a certain amount of time, for the same amount of time, it will be enough, let's say, for you to spend 400 hours, because I'm going to be teaching you all of those things that you don't need to learn on your own. And let's be realistic, you will not be able to find those things anywhere else in a compact mode and in the way that I'm trading them. What I'm doing right here is life-changing, it is spectacular, it is unique only to Chris FX. Now enough with the talking, and let's go ahead and proceed with example number 2, which is going to be our bearish example. Again, right here, what do we see? We see a bearish move that was coming from the past, a retracement, a push down, which didn't break structure here, which we don't care about, came above, manipulated breakout traders into buying, and then broke below. Of course, you have guessed it right. This is the 1 hour time frame perspective. After this grab of liquidity, right here, we would be looking for our rules anyways. So let's go ahead and proceed and look at this area closely and identify what we need to identify. As we said, now I have zoomed into this area exactly right here. And we see that price broke above again, and now it is retracing. This happens on the 1 hour time frame. Here we are interested in shorting because this is a bearish example. We have the clear grab of liquidity and price is clearly rejecting the area. It is about time, as I'm saying, to scale down to the 5-minute time frame to identify our other rules. Off we go. First of all, again, you could identify every single thing from the 5-minute time frame if you are a very experienced trader. If you are not a very experienced trader, you would most likely than not, you would be identifying those areas, you would be entering here, you would be losing, then this area, you would be losing again down here, then this area, and you would be losing, so you would have a bunch of losses. Do not do that unless you are extremely experienced and unless you have tested this thing 1,000 times and more. Now we are taking a closer look at this grab of liquidity. Do not get confused. This area we are looking at right now, look where my circle points, where my arrow points, it is this area, not this area right here, not this. Why? Because we wouldn't know when price came and grabbed this liquidity right here, we would already be looking for our rules. So now we have scaled into this area right here. The first grab of liquidity, I'm saying it happens right here, the purple area. The purple area is this area right here. Furthermore, the first momentum move towards the downside is happening after the grab of this liquidity. Why? Are you able to identify it as it is? All I'm going to show you is the inversion FVG from the left. Let's move on. Why are we considering this as an impulsive move, as I'm saying? Let's see the next slide. Again, this is the very same purple area. This is our inversion FVG. This move is considered to be impulsive because it violates the inversion FVG with a body of a 5-minute candlestick. This is all on the 5-minute candlestick. Okay, and it does qualify for our rules, and we will see where we will be placing the entry, the stop loss, and the take profit, of course, over here we will see. Entry. We did violate, breached, as we said, the inversion fair value gap from the left. Why was this an inversion fair value gap? It is the gap on this candlestick right here. If we were to place numbers 1, 2, and 3, the gap that is created from the high of candlestick number 1 and the low of candlestick number 3. The gap that is left on candlestick number 2, that was untested, it was just breached with the body of a candlestick. We are placing our entry right here with a stop loss, where guys, right above the candlestick that breached, as we said, the inversion fair value gap. And this is the candlestick that breached the inversion fair value gap, so the stop loss goes right above this area. Now, what is happening in this occasion? Look, in this occasion, we see the price did an extra push and grabbed even more liquidity. What do we do now? Guys, it's simple. We just enter again later on. Those opportunities will occur a lot, but you don't want to miss those opportunities when they happen. So when they happen, you can have a rule that I'm entering 2 times maximum. I wouldn't suggest any more than 2 times. This might be a question that you might be having. If the first one fulfills the rules, you are entering. If it loses, you are entering. If an additional grab of liquidity takes place, you are entering again. But if this breaks again above, then you are done with this move. Even if it plays out, you don't care about it. Now, again, this was the entry, there was the stop loss and the take profit whatever, but price came above and grabbed even more liquidity. Now, with this extra liquidity that was grabbed, did we again form an inversion fair value gap on the down move, which we breached? Yes, from the high of this candlestick and the low, actually it was in the low of this candlestick right here at the beginning, then the remaining part was this. We breached it with the body of a candlestick, but where did the breach happen? Did it happen here or did it happen here? Let's see. My lovely guys, if you recall, we had said that we need to see a breach of the 5-minute inversion fair value gap with the body of a 5-minute candlestick. Here we had this thing previously with the first grab of liquidity here. Now the first candlestick that is grabbing, that is breaching, let's say with the body, not with the wick, with the body, it is closing with the body below this candlestick, is this one exactly right here. So what did we say? The entry goes exactly right here. With futures you could be activated to the tick. Stop loss, what did we say? All the way up here? No, right above the candlestick which breached the inversion fair value gap. Do you want to be even more safe in this occasion and place your stop loss above the inversion FVG or somewhere here or here? Go ahead and do so. I wouldn't do so with this strategy. Now, regarding take profits, as we said, you can go ahead and target other areas of liquidity or fixed rewards to risks, or you can go ahead and follow the daily bias and go for it, as in this occasion, this is more than 10 to 1, 12 to 1 or whatever, and you see this was our entry exactly right here. Okay. Now, this is the end, and you can see that when this video was made, actually this slide, when this slide was made, it was made right here. I'm gonna change it. It was made in the morning today. And what I'm gonna do right here in front of all of you, I'm gonna show you that these are real accounts, because you might be saying, no, Chris, those are not real things. So what I'm gonna be doing, look at the very same accounts right here. You see the same numbers, but now those have gone to payout already. Okay. So it is very important, in my opinion, that I will go ahead right here, right now, in front of all of you, and that I will go ahead and do that. Okay. I will save that. I will save that to downloads. And then look what we are gonna be doing. My lovely people, we are gonna be deleting this thing and we are gonna be pasting the new thing with the payouts right here, and we will increase it for all of you to be able to see it. Let's increase it for it to occupy the whole screen. Like that. It is fantastic. This is absolutely an absolute sight to be seen. Look at that. Look how many wins. This needs $33 for the 4,000 of payout. Those have gone to payout already. 3,000, 4,000 tomorrow, and more thousands are gonna be following. Go ahead and join us right here, right now. I am the real deal. I am transparent. I am doing it live. I'm even showing, of course, the losses live. Okay, losses are happening as well. If I would have a 100% winning percentage, I would be Warren Buffett or Jeff Bezos. Okay, I know that Jeff Bezos is maybe not trading, but I'm just saying I would be a billionaire. This is my point right here. Furthermore, if you want to see the best deals for prop firms, go ahead in my website, which I will be leaving the link down in the description, and check out the best codes. Subscribe to my YouTube channel, share this video with all of your trading friends, family, whoever you see on the streets. Go ahead and tell them this guy is great. This guy started from zero and he built up his way, and now he's right here and he's doing it live every single day. And this is what you are also gonna achieve, guys, because I believe in you. I have seen people with strong will achieving things, and I have seen those being toxic, remaining toxic and not achieving anything. Be positive and just go ahead and see what works for you. If you think that something might not work for you, you don't need to do it, guys. You are a free human being and you have the right to freedom and to your own choices, as also the responsibility of your own choices. Let's always remember that. And one thing that I want to close us as a quote, let's say, I want to close this video with, is a quote that our right to freedom should not be violating another person's right to freedom. So be respectful to other people, to other traders, besides the way they're approaching the market. Okay, have respect for everybody. This is how I'm gonna be closing this video. This is gonna do it for today, traders. And thank you all for watching. Until next time.